Alright, yes guys, welcome back to the channel. So today I'm going to show you how you can use ICT concepts and then also combine them with PVSRA method. If you guys aren't aware of PVSRA method, or if you're not even aware of ICT method, or ICT, if you're not even aware of ICT concepts, let's say, I'm going to show you the basics of ICT concepts, and then I'm also going to show you how you can integrate the PVSRA method, which is what I use, which are the vector candles and things like that. And that's why we have one of the best win rates amongst any ICT trader. And I want to show you this spreadsheet quickly, just so we can see all the profits we made this year so far using this exact method that I'm going to teach you right here, right now. So let's start breaking this down. All right, people, as we can see here, this is all the trades that we have actually taken throughout the year inside of the VIP signals room, which is right here. As you can see, we post the signals, we go live every single day if there is a valid trading opportunity. And we can see here, over the course of the year, we have secured around $77,160 on one account. That's just one account, bear in mind. And this is all the same account. We have never actually officially blown an account, because we can see here the profit has always been nice. It kept us in a nice level where we will not be blowing any accounts around here. And it's that simple. And I'm going to put some payouts up on the screen somewhere. I don't know where they are, but they're going to be somewhere around the screen. So if you guys really want to step your game up and actually educate yourself exactly how to trade ICT concepts efficiently, this is the exact way to do that. So as we know, ICT concepts on their own, in my opinion, are 50-50. The concepts are correct, the ideology is correct, but you need more information. You can't just base all of your information off of a fair value gap and a breaker block. To me, doesn't quite make sense, because there's going to be traps being formulated inside of those zones. If everybody's trading that way, then this way won't work anymore. So I believe that maybe in 2021, 2022, ICT concepts alone would have been enough to just get you over the finish line and actually become profitable throughout the year cycle. But as time has gone on and everybody is trading these concepts, we're going to have to add different elements towards that so that we can actually take advantage of the way that prices move and using ICT concepts, but we're going to be taking significantly less trade. And I'm going to show you exactly how to take advantage and how to know what trade to take and what trade to avoid. We're going to be using vector candles, PVSRAs, fair value gaps, breaker blocks, time guys. Time is the most important one in my opinion. So let's start breaking this down. So for anybody that knows exactly how to trade ICT concepts, going just off the basic ones of the 22 mentorship, which is the fair value gap, and then also the breaker block and the market structure shift, displacements, SMTs, all that kind of thing. If you understand exactly how to trade that, just skip the video and I'll put it up on screen somewhere where you can continue watching the video, and that'll take us to the PVSRA method. As we can see here, understanding exactly what a fair value gap is. So fair value gap is where you can see right here, we have a break in price. So there's a gap you can see here in between three candle formation. And then the second candle in the middle, prices expanded significantly and left a gap, which we know we're going to have orders stuck inside of that area. Therefore, with orders being stuck inside of that area, we have to assume that price is going to come back down to that area and then remove away from it. So once it's fulfilled those seller orders, in the bullish example, it's going to move higher. So that's exactly what we're looking for. So fair value gaps, the most basic concept you guys can learn. If you're trying to learn ICT and you can't understand a fair value gap, I don't know what to tell you. Anyone should get that. This is like basic stuff, really, really easy stuff. All right, so now we're going to come on to understanding breaker blocks. This gets a little bit more tricky, but it's still very easy to see. It's not hard, guys. It's still extremely easy to see. You just need to see a swing high be taken and then take out the swing low and displace below it. So you kind of need to see like an M formation, kind of like an M, and then the M of the final leg of the M drops down, okay? It's essentially what you're looking for, but the second leg has to be above the first. You can see in this diagram that we've got right here, here's your first leg of the M, drop down to create the middle bit of the M, up, take out the high of the M to break down and take out the middle section of the M, giving you like an M formation. That's exactly what a breaker block is. It's the candle that forms the drop of the M, right? That's the easiest way I can put it. I could use all these technical terms and you guys are just going to switch off and you're not even going to know what the hell I'm on about. So M formation, just look for M's and W's. M's at the highs, W's at the lows. Really simple. You can see here, W formation at the low. Breakout, breaker block is the candle inside of the M. Okay, does that make sense, guys? Okay, so now that you understand the fair value gap and breaker block, we're now going to combine the two concepts, which is going to give you the unicorn model. This is the best model that ICT's ever come up with. It makes the most sense when it comes from a liquidity standpoint. Makes the most sense when it comes to market maker traps. It just makes the most sense in my opinion, and it works. We just looked at the spreadsheet, and that's all those trades are taken live. Every single one of them is taken live on the channel, and I can't delete any of the Telegram stuff because people would call me up because we have a members chat inside of that room. So people would go, wait a minute, that was a losing trade. Why did you delete it? So we know over time you're going to get paid. All right. So that's why in my opinion, I believe that the unicorn model is actually the best for ICT concepts. So all a unicorn model setup is just the fair value gap and the breaker block, which is exactly what I just went through with you a second ago. So combine the two together. W formation, break out, fair value gap between two candles, enter. M formation, between two candles, there's your fair value gap, enter. You know, just come back to these diagrams if you do get stuck, but it is very basic. You should be able to pick this up and start seeing this all over the place. But that's the problem. You will see this all over the place. You will see this everywhere. No matter where you look, you're going to see this formation occurring over and over again, and 30% of them are just absolute garbage. The other 30% will just stuck in consolidation. You know, it's minute, the ones that you need to be picking, and I'm going to break down to you exactly which ones you need to take and which ones you need to completely eradicate from any of your trading decisions. So time is the most important thing. Like, you need to be waiting for these injections inside of price. You can't just be taking a trade during the Asian session because Hong Kong's open and gone, yep, that will do, sweet, let me load up. No, just, or if Frankfurt's open, for example, you just go, yeah, that'll do. It's moved down 5 points. I see a unicorn model set up occurring. Let me just take that. No, guys, like that's just not. It's not enough money that's been swept. It's not a trap that's been formed, and that's what all ICT concepts is about. It's about understanding where the manipulation's being occurred and then taking advantage of that manipulation. Okay, so you can't be taking trades in a consolidation zone. You need to wait for AMDs, which we'll go into another video. That's something else I need to speak to you guys about. But this is the basics. I'm just taking you guys to the basics. And then in episode 2, we're going to go through S&Ts and AMDs. That will be episode 2, so stay tuned for that. But time over price. So where's the first macro? The first macro is at 9:45 to 10:15. This is 15 minutes after the New York futures market opens. So the New York futures market opens at 9:30. Okay, so you're going to see manipulation just prior to that. Around 9 o'clock, you'll start seeing the manipulation. This is all in UTC -4, by the way, for anybody that wants to track these times. At 9:30, you're going to see a huge injection of liquidity. It's either going to go up, it's either going to go down. You know, essentially that is just gambling. If you just enter at the 9:30 and you just pick a direction, it's 50-50, it's going to go either way. But that's going to come to the manipulation of the AMD. So this will be the manipulation at 9:30. So we're going to wait 15 minutes just to see a little bit of movement, get a little bit of a read on where price is going to put the odds in our favour. If you just enter at the 9:30, you're gambling, don't do it. Just wait 15 minutes, be patient, okay guys? I know at 9:30 you might see price just completely drop down, you feel like you're missing out, but I'm going to show you exactly why that is part of the manipulation, and that's the way the markets want you to think. And then the second macro is at 10:45 to 11:15, and then the PM session, which is 13:45 to 14:15. As you can see there, I've written down everything that I'm basically explaining in this video, so if you want to go through that and check it out, be sure to. And then let's move on to the vector candles. So this is the point where we start swaying away from ICT and move into the PVSRA method, which is a method I've been trading for a very, very long time. And I'm going to start breaking down exactly how to take advantage of the PVSRA method to make sure that you aren't taking any silly trades, because a lot of the ICT community, or a lot of ICT traders, they might claim they have good win rates, good results, but can they really prove it? Can they really prove it? Not many can. But as we've just seen, I've showed you guys all of the proof that you need to be utilizing these vector candles. Okay guys, so we can see here that we have a blue vector candle, and what that indicates to me is a 150% increase in volume to the upside. A red vector candle is a 200% increase in volume to the downside. A pink vector candle is a 150% increase in volume to the downside, and a green vector candle is 200% increase in volume to the upside. Okay, so there's 2 candles for each direction. We have blue and green for upwards, and then we have red and pink for the downside. So you have 2 ways the price can go, and you will see that these candles will perform. Once you put these on the charts, you'll understand this in 10 minutes. It doesn't take very long. But this is exactly what it means, and that's what it indicates to me. So I'm waiting to see these candles come out, so I know where the volume is, I know where the orders are, I know where the zones of interest are. That's what we're looking for. Zones of interest. So look. So this is the formation that we're looking for. As you guys see earlier on in the video, we were looking for the unicorn model setup. So we can see that clear as day. Right, I can't really zoom into it, but you can see it right here. I know it's not very clear. We'll go through a little stream in a minute, and we'll watch it in live time of exactly how we, because execution is also a very difficult thing to do. Pulling the trigger when you're on a funded account or a newly funded account, and you're scared to see your account go in the negative, right? Because nobody likes to buy a funded account and then just see their account in the negative. You know, it's not very pleasing for the mind. So execution is hard. You know, sometimes you're going to end up getting in late. Just pull the trigger. If you see this formation, just pull the trigger. You know the odds are in your favour. You have a 70% chance of this playing out, a 30% of losing it. Why would you not take that? Over time, it's going to pay out. So now let's go over this trade live so that we can actually get a view of the execution. All right, guys. So now we actually have a repeat of the stream that we took on, what day was this? May the 6th. So we're going to go through all of the trades from last week. And I'm going to break them all down for you, but we're just going to go over this live trade so I can show you exactly how to execute in real time. So let's start playing this. Let's try and speed this up a little bit. I don't know how to do that. Alright guys, so we can see here that we're inside of the trade right now because we've had our unicorn model set up. We've took a fair value gap inside of a breaker block, and we have a pink vector candle at the lows. The pink vector candle at the lows indicates to me that we've seen an aggressive drop off at the 9:30 open. So you can see here the 9:30 open give us the manipulation high with the green vector candles present, ended up dropping down, being the trap, causing the manipulation lower. Took out all the traders that were actually induced into the longs at the 9:30 open, took them all out of their positions, make everybody think it's going to go lower because of these red vector candles. We're seeing aggressive selling, extremely aggressive selling. So we know this is a trap. We know this is a trap once we see the market structure shift. We know that is a trap. Therefore, we take this trade. This is A plus trade. This is an A plus trade. We take this trade all day, every day, and we'll show you exactly how to do that. So we can see there, already moved our stops in a break even, already took off half the position. So right there, you're in a very good position to actually just let this trade run. And our next target will be the high of that vector candle, because as we said before, with the fair value gaps, price is always going to come back to them at some point. But it's going to be more likely to come back to red vector candles because there's a 200% increase in volume. So that means that fair value gap is more significant than any other random fair value gap. And that's why it's important to have these on your charts, because you can see where price is likely to move to. Because price is going to favor this fair value gap over this fair value gap because there's more orders there. So if there's more orders inside the higher fair value gap, price is likely to go up to it and take it out, because that's how the market works. Wherever the most orders are, price is likely to go to that point. Okay, that's how marketplaces work. You know, if someone's selling an item at this price and someone's selling an item at this price, you're going to go, right, I'll go to that person then because that's cheaper. Okay, so whatever the most incentive is for price to actually go to is where it's going to end up. So that's why we have our TP above that fair value gap red vector candle right there. And there we go, guys. Okay, so that would have been your second TP absolutely smashed and taken out. And then we have our final TP at London highs, as we know that is a major draw for liquidity. And I'm going to skip the rest of the video because I don't. So you can see there it's going to final TP. I don't think it actually does. I'm pretty sure this trade doesn't. Yeah, I don't think it goes to final TP. I do believe we get stopped out at this point because we're now starting to see green vector candles at the high, indicating that the trap is starting to be formed to actually start selling off at this point. So that's why we trailed our stops aggressively, because we're seeing the opposite of what we got into the trade with. So we saw that happening at the lows. So now it's starting to happen at the highs. We know this may be a manipulation to start sending price back downwards. So that's the reason we start trailing the stops aggressively. But I'm going to show you how to do all of that. It's not a problem. So now that we've got that live trade out of the way, this is exactly what we are looking for. These are the tier list of the setup that I actually take. So I'm not going to read all of this out because that's just a headache for everybody. You know, like there's so many words in here, I don't even want to bother. But so take a screenshot of this and keep this close to you at all times when you're actually trading. So this is like a little cheat sheet that you guys could use in order to know exactly what you're looking for. Now it's time for the boring stuff. Okay, guys, I know this is boring. This is risk management and it's not enjoyable. Everyone wants to just full port their accounts. I understand, but we have to take this seriously. If you really want to make money, you don't want to keep buying accounts. You just want to make one account last and get monthly payouts from each account every single month and actually turn your life around, start changing the way that you do things in life. All right, so we can see here, these are all the account sizes that you guys are probably most familiar with. 50Ks, 100Ks, 150Ks and 300K accounts. This is the full risk management plan that you guys need in order to sustain profits throughout the year. This is exactly what I've used. It's worked for me, as we know from the spreadsheet. So take a screenshot of this once again. Let's move forward. So if you guys want access to this spreadsheet, link is in the description. I've literally just done this. It's around 2 AM right now that I'm recording this video. So I've been up for a little while making sure that all the figures are correct. Okay guys, so we're actually inside of a trading day now, and I want to start breaking down to you why we didn't take this trade right here. So you can see here the 930 opens manipulated higher. Then we've started breaking down. We've got our red vector candle of our fair value gap. And then price would come into this. So you could view this as a displacement, but this vector candle and this vector candle and this vector candle gives me the indication that we're actually going to be looking to start going higher. Reason being, we've taken out these relative equal lows of liquidity, and then we've got a blue vector candle at the lows, which shows to me that volume is starting to increase to the upside. Therefore, I'm not willing to take a trade to go lower to target those London lows that we have below right here. So we have London lows, relative equal lows, and a lot of people that would have been their target. For me, we didn't take the trade. We're not willing to take this trade because of these vector candles. So I hope that helps. But we did actually take a trade in the PM session, which was actually break even. So let's start having a look at that. Alright guys, so now I'm going to start showing you exactly the trade that we took on Monday, I believe. I believe it was Monday. Yeah, it was Monday. So the trade that we took on Monday, we can see here, we swept these relative equal highs toward the left-hand side, which is actually the Asian session high from the Thursday session the week beforehand. And it hadn't actually been tapped into, so price was looking to come back to this zone. So we can see here, yesterday's high, okay? Yesterday's high was that previous day high. Okay, so now we're inside of the macro session itself, and what do we have here? We have green vector candles pushing price higher, sweeping out yesterday's high, which is also the Asian session high, and relative equal highs. So that's 3 points of interest that it's tapped into. We are now also at high ADR, which we'll go through in episode 3. This is just episode 1, this is the beginner stuff. We can see here, fair value gap, displacement, green vector candle, blue vector candle at the highs. So we're going to be looking to take a trade off the first gap the price comes back into. Let's have a look. Okay, so price looks like it's going to leave without us, and we're not actually going to be able to catch an entry. So our entry was at 9.48. So it actually was this right here. So this was our entry right here. Keep your stops at the highs, and then you want to be targeting. Honestly guys, from this point right here, you just want to be targeting. Let's have a look what we actually did. Okay, so this was the trade that we actually took in, and the reason that we took it was because we're anticipating the price is going to come back down to this vector candle here, which is also this breakaway gap, which took price higher from the initial move at the 930 open. And the reason that we can take this trade is because down below we have relative equal London lows. So we have London lows right here, and we also have this relative equal low, which is almost the same as this. So you can see here, it's 2 sets of lows. It's very important. Remember that W formation I was telling you guys about? This is the bottom of it. So once the price has actually made its move higher, it's going to look to come back down and take out any traders that didn't take any profit. So that's the reason that we took this trade, and I'm very confident in this trade at the time of taking it. Of course, I know this is a break-even trade, but this is the concept that you guys need to be understanding. Green vector candle pushing price up in formation, blue vector candle at the highs after sweeping yesterday's high, displacing lower below this swing low, tapping into this fair value gap. They start seeing a manipulation lower, and there we go guys. So at this point, this is a key thing that you guys need to get into your head. So now that we've taken out this short-term low that we can see at this point right here, so you can see how price has just come back down to it and wicked it and then moved away. Green vector candle pushing price artificially higher. This is a trap. This is a trap to make people think it's going to go low to actually go high. So what do? Just move your stop to break even. Just get out of the trade, or have no money on the table. And that's exactly what occurred. There you go, we were taken out of the trade. I think, yeah, we may still have been in at this point, but eventually it does go to break even. We're not just going to watch replay for no reason. So that's trade 1. Let's have a look at trade 2. Okay people, so welcome back to the second trade of the day. So we can see here that price has taken out the Asia highs. So now we're looking for price to actually come back down, and we're going to be targeting these London session lows right here. So that's the thought process coming into today's session, and we've had our manipulation higher without actually sweeping these London lows. Therefore, I'm looking and anticipating the price will come back down to come and sweep these points of sell-side liquidity. But unfortunately, things don't always play out exactly how you wanted them to. So coming into the 930 open, price actually done the move a little bit early, and that is a nice 100-point move. But of course we have rules in place that we're going to wait for the manipulation to occur, and then we're going to be taking the trade higher after we've seen that manipulation. So we can see here, price is now taking out London lows. So we're going to be targeting the previous day high, which is somewhere up there. So that we can see that price is now manipulated lower. So we're going to be targeting the opening session right there. That's exactly what we're looking for now we've swept London lows. So I'll mark this out so it's clear for you guys. So we've taken out London lows. Now we're going to be looking for a trading opportunity to take price higher. So now that we've seen the unicorn model setup playing out once again, we can see here that we've taken out this short-term high right here, which is the middle of the W. I know this is technically the middle and we have technically taken out, but because price has dropped very slowly and it's not been very fast, we can happily say that this is the middle of the W formation. So we can see here, red vector candle at the lows, red vector candle at the lows, indicating to me that price has now done the business, because if they wanted to run price lower, they would have. They had every opportunity in order to run price lower, but they've chosen not to. They've chosen to come back up and take this middle point out and displace higher. I could have taken a trade here, but you can see we don't have a clear displacement above this high right here, so I wasn't confident in that trade at that particular point. And our target is simply just going to be 46 points, and we'll go from there. Alright guys, as you can see there, we were taken out at break even. Once again, same old thing. We took out this short-term high right there, and then we actually took it out, wicked it, and broke down. So as soon as price took out this short-term high, I was moving my stops into a break-even position, and then yeah, trade broke down because red vector candle displacing lower, just get out of the trade, break even. So nobody lost any money on that, and another break-even day, unfortunately. And I know what some of you are going to say, price didn't actually tap into this fair value gap. I was anticipating it too. So when it come 1 point off, I just entered. You know, it's not even a point. It's like it's three quarters of a point. So therefore, that's enough for me just to get in and put my risk on the table and see if we can pull this off. Okay, guys. So now we're into the PM session on the Tuesday, July 15th as well. So we took a trade in the morning and it was a break-even trade. We took a trade on Monday, it was a break-even trade. And now we're looking to take another long position inside of the PM session because the first trade didn't lose, it was a break-even, so we can happily have confidence in taking another trade during the PM session macro. Alright people, what do we see here then? What gives us an indication that price is looking to reverse from this point? We can see here the price has swept this point of sell-side liquidity during the lunch session, so you can see at 11 o'clock, just before the lunch session. I can't say that because I've bit my tongue, so session, that's what you're getting, unlucky. But let's keep it moving. So we can see here that price has actually taken out this sell-side liquidity. It's displaced higher with a pink vector candle at the lows. You can see it's a manipulation candle because we've got 3 hits to the lows with red vector candles. So market maker is artificially pushing price down, trapping traders into shorts. So we're going to look to take advantage of the move back up to the highs. And the session times for this is 13:45 until 14:15. The trade slightly early, we actually got into it at 13:44. I'll leave a screenshot on screen right now so you guys can see. So we're actually already inside of this trade at this point. And there you go, there would have been another entry if you needed that to happen. So we can see right there, as soon as price has taken out this short-term high and it's swept it, move your stops instantly to break even at this point and have your first TP 157. So first TP. So our first TP was this white line right here, and our second TP was this high right here. And I think our final TP was all the way up there, but we're not going to get that on this trade. Let's have a look. And there we go, guys. So that would be first TP taken out right there. And there we go. That was second TP secured at that point right there. So once this happens and you start seeing a little bit of consolidation at the highs, just move your stop into a secure spot, which ours was. So this white line represents exactly where our stop loss was. And there we go. It hits our stop loss and then it does continue higher, I believe. Oh, there you go, it doesn't continue higher. So really good stop to have it right there. We managed to secure most of this. We're out 75% at 46 points, and we leave a trailing stop securing us another 33 points, I think it was exactly. So we can include 33 points at one contract, which is $20 a contract, which is something like $700 that we managed to actually catch just by trailing our stop aggressively once we start seeing consolidation at the highs. And once again, same old story, green vector candle at the highs looking to reverse. Same thing. What do you see down here? Red vector candle at the lows, reverse. You're going to start seeing these patterns forming. You're going to start seeing them all the time. But you have to pick the right times to use them. You can't just be taking them willy-nilly. So that was the first winning trade of the week on the Tuesday. And 2 break-evens, 1 winner. Let's get on to the next trade. Okay, so now we're coming into Wednesday, which is actually the final trade that we took this week. We didn't see any opportunities on Thursday or Friday, so this will be the last video, and then you guys can use this information to actually implement this into your own trading style, and maybe just use it and put your own spin on it. Do what you need to do, but you can follow me, or you can use these vector candles to build your own strategy. So whatever you feel most comfortable with, but this is what works for me. That's why I'm teaching you guys exactly how to do it, because we know full well that it works very, very well. Okay, people, so coming into the session, we can see that price is now taking out the Asian session highs, and we also have these London lows down here. So we're going to be trying to see if, now that price is taking out the Asian session highs, we're going to see if we can get an opportunity to see price come back down to the London lows. So let's see if we actually do get an opportunity here. So same old story. You guys hopefully should be starting to form a pattern inside of your head right now that gives you the indication of where price is going to go. We swept the Asia highs. We have a red vector candle at the highs at the 9:30 open, manipulation higher. So anybody that's inside the shorts at these points has now been taken out of their trade. And we have evidence for that because the volume has increased as soon as it swept these highs. You can see here, the volume's starting to build but not going anywhere. This is orders being put into the market to force price higher, stop at any traders. Market maker's going to close the position and open it in the opposite direction. And that's the true move. So right here, this swing low is your market structure shift because it's the M. Remember the M I was telling you guys about? It's broken down past the M. So we mark that out to market structure shift. So now we're looking to take price lower. And the reason why we're confident in taking this trade is because we think the drawn liquidity is these London lows. So that is exactly where final TP would be and 94 points away. Let's see how this plays out. So we can see right here, this is a fair value gap. I know this is a little bit more difficult to see, but if you really zoom in, you can see this is a fair value gap right here. So price has come into it, respected it, 9:45 open. I'm happy to take the trade. So I'm happy to take the trade at this point. So let's see how this plays out. Okay, so our first TP was about 30 points away. So we can see right there, we hit our first TP. Once you hit your first TP or you take out a short-term low, you move your stops to break even. So we've secured around $1,000 on that move right there. And now we've moved our stop into break even and we just let it play out. And there we go, guys. Unfortunately, on this occasion, we didn't get the London lows. We got very close to final TP. I think we even secured a second TP on this trade, but unfortunately, it was not meant to be. And sometimes that's just the way it goes, unfortunately. So we managed to secure around 60 points, and I think it was about 100 points with the trailing start. But I'm hoping you guys are starting to see an indication. And look, you have the same setup forming on the other direction. What do you have here? Red vector candle at the lows, green pushing price out, displacing, starting to look to trade higher. You can start seeing these patterns that just keep occurring over and over again. So why not take advantage of it? So yeah, that will be me done for this webinar, and we'll come back on episode 2 and we'll start looking at SMTs and AMDs. That's what episode 2 is going to be about, so I'm going to try and get that video done for you next weekend. But until then, hopefully you guys can take advantage of this, and I want to see you guys actually and making some money. Let's leave it there. Peace.